What makes Bitcoin different to your favorite meme coin or to your DeFi project next door? It is its fair distribution, right? Bitcoin is apparently the people's money. But how fair is Bitcoin actually distributed? How much do we need to hold of Bitcoin in order to be an average Bitcoin holder, in order to be in the top 20% of holders? Let's have a look at the data. Because what I found was quite surprising. Retail actually does not impact the price whatsoever. What moves the prices is 100% the whales. Bitcoin is in the hands of the millionaires and billionaires. Have a look at this table. In this table, we have segregated different classes of holders. So we go from a minimum holding threshold to a maximum holding threshold. So for this first line, you can have a maximum of 0.001 Bitcoin, which is currently worth roughly $60. And that segment of the market, that segment of addresses hold roughly 0.5% of Bitcoin supply. So if you've got some play money in Bitcoin on your hardware wallet somewhere, you're not part of a huge army that owns most of Bitcoin. There's actually not that many people like you because only 0.5% of all of Bitcoin is held by those wallets. Now let's go one order of magnitude up and let's look at the wallets between $60 and $600. That's the second line here. They don't hold that much of the supply either, 0.2%. Now if you hold less than 1 Bitcoin, then you are part of the bottom 7.6% of holders. And so what kind of segment holds most Bitcoin? It's the one that are highlighted here in green. It's the wallets between 600,000 and 600 million. Those kind of wallets hold in aggregate 66% of supply. So again, this line over here represents all wallets between $600,000 and $6 million worth of Bitcoin. A minimum holding of 10 BTC, a maximum holding of 10,000 BTC. So if you want to figure out where the Bitcoin price is likely going to move from here, we have to look at what is the majority of holdings doing. We are not looking at what is the majority of people doing because most people are not millionaires. We are looking at what is the majority of Bitcoin doing, the 66.1% of BTC. So let's have a look at those cohorts. Let's have a look at those 3 cohorts that hold the majority of Bitcoin. Here's cohort number 1. So between $600,000 and $6 million worth of Bitcoin. Those kind of holders did not grow in number in the last 6 to 7 years, roughly. We do see how they tend to take profit, how they tend to exit whenever we are rising very heavily in Bitcoin. And we tend to see how they're buying back in when Bitcoin is low. But overall, they're not really changing their holdings that much. Let's go in order of magnitude up. Here we see that there was a lot of accumulation at the end of the bull run, so not necessarily smart money. And we also see very slight growth, as in we are close to an all-time high. There's almost 4 million Bitcoin held by the wallets that have between 100 and 1,000 BTC. So again, that's 6 to 60 million worth of Bitcoin. Let's go another order of magnitude up. So that's now the billionaires, that's now the centralized exchanges, that's now potentially the ETFs. Those kind of wallets bought massively during the miner capitulation in 2018. They also bought all the way up and stopped buying when the rally lost steam. Now they tend to rather distribute. And so why is the number of holders here not changing that much anymore? This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below. I think it's because the majority of those kind of holders don't just buy Bitcoin in order to get a 10x out of it. They hold it because it's a nice diversifier to all of those other assets they hold, right? They hold all kinds of houses, they hold some companies, and they also hold some Bitcoin. And they simply want to be hedged against all kinds of scenarios. And so it's not those kind of wallets, even though they hold the majority, that cause the Bitcoin price to appreciate over time. Because have a look at this, right? The wallets that currently hold between $600,000 to $6 million worth of Bitcoin, that number is stable, but the Bitcoin price went up from $1,000 to currently $60,000. Another reason why those mega whales continue to hold and they don't sell is not necessarily only because of diversification benefits, but also because money continues to flow long term into the market. Because this here is small retail, right? Up to $600 worth of Bitcoin per wallet. The Bitcoin that had been held by those wallets roughly doubled since the peak of 2018. When we go in order of magnitude up, so that's now up to $6,000 worth of Bitcoin, the number of wallets also continues to grow. It did not necessarily double, it maybe went up by 70 to 80% during those 6 years, but that's still a pretty nice growth rate. The number of aspiring whole coiners, so the wallets between 0.1 to 1 Bitcoin, also went up by roughly 60 to 70%. So in the smaller wallet cohorts, we see pretty constant accumulation, and that's what keeps the larger cohorts holding Bitcoin. And so let's play with that scenario. Let's say we suddenly see a dump in Bitcoin's price again. Maybe because internally there's some FUD, maybe because externally in traditional finance there's a big crash, then moves over to Bitcoin. Let's say Bitcoin drops by again 70, 80%. What I think is important then is to see that the mega whales are actually buying that dip again. Very similar to what we have seen during the final capitulation of 2018. The mega whales scooped up all the supply and created the floor. Those whales, by the way, did not buy up the final FTX collapse when Bitcoin bottomed at 16K. It was retail actually that bought that bottom. But in case we see a flash crash in price again and we see how the largest of the holders buy up, then I think we could even double and triple down on the position, right? If the largest players that dictate the price movements when they get in and when they create a price floor with their purchases, then why not join those very strong investors? Still, it's very important to see how much Bitcoin is still centralized. I was actually surprised seeing those numbers. Even if you own 100 Bitcoin, you're still in the bottom 40% of holders. And again, that's $6 million worth of Bitcoin. And probably you want to own other assets as well. And so by those metrics, Bitcoin is really not people's money, right? Bitcoin is simply just another investment vehicle. Focusing on what the big money thinks about Bitcoin is probably way more important than thinking about greed and fear of small retail. The retail demand and the retail attention really does not move the needle that much. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. The link is down below. It's 100% free. Looking very much forward to chatting with you.